Good afternoon. Thank you for joining us today. My name is Will Tanner. I'm the director of Onward, a think tank dedicated to renewing the centre-right for the next generation by coming up with bold and practical new ideas for making our country a better place to live and work, and reaching out to new groups of people. We're here today to talk about in some ways, a quiet revolution that's been underway in the UK economy over the last decade, but a revolution which may well prove pivotal in the economic recovery after the pandemic has subsided. By that, I mean the rise of the fintech industry and its possibilities, not just for driving growth in the City of London, but providing growth all around the country. At the time of the financial crisis in 2008, retail banking meant having a current account and not that much else. Banks ran on legacy systems that were quite clunky, quite expensive. Consumers had not very much choice over their money or control over how to use it. Cash and checkbooks still reigned supreme. And if you fast forward to today, the UK fintech industry has transformed our financial experiences. We now have a slew of challenger banks competing with established players the world over for our custom. Anyone can download tools that run complex machine learning algorithms on their accounts data to better budget or to spot fraud or to do a range of other things. And the UK's financial institutions have developed a world-leading, genuinely world-leading regulatory structure through which open banking and regulatory sandboxes are driving a new wave of innovation. But for all of that progress, and that has been extremely exciting progress, the two people with me today think there is still a lot more that we could do. And that if we are smart, we can use that opportunity to drive growth, not just in its traditional home, the City of London, the Square Mile, but in places all around the UK, and to support the government's ambitions to level up growth and opportunity everywhere. Ron Kalifa is a non-executive director of the Bank of England, former CEO of WorldPay, the payments company, but he is, most importantly for this discussion, the chair of the Kalifa Review, which was commissioned by the Treasury last year to look into the fintech industry and opportunities for growth, and which reported at the budget last week. Alongside Ron, we're joined by Charlotte Croswell, the CEO of Innovate Finance. Innovate Finance is the industry body representing the UK fintech sector, and which provided the secretariat for that review. Prior to joining Innovate Finance, Charlotte held a number of management positions at NASDAQ and the London Stock Exchange and has a kind of vast array of experience in the financial sector. So the way in which this event will work is I will shortly invite Ron and Charlotte to set out 5 minutes of opening remarks, one after the other, after which we're going to open up to Q&A. So if you have questions and questions that you would like answered, please pop them in the Q&A function at the bottom of the screen. Please do so as the speakers are speaking. I will just pick them up and pose them to our two speakers after they've finished their remarks. We only have an hour, so please don't be shy in asking your questions early, and that will ensure that they are asked before the end of the session. And I'm really looking forward to having a kind of in-depth, serious discussion about not just the principles of Ron's review and the ambition that he sets out, but the practicalities. Actually, how do we get there? What do we need to do next? And what is the level of opportunity if we get it right? So without further ado, I am delighted to hand over to Ron Kalifa. Ron.
Well, thank you very much, and thank you for the opportunity, and delighted to join you today. I'm going to talk about fintech, and I think it's a sector that we should recognise that we have a leadership position in. It's a position that's envied around the world. The UK's got a market share worth £11 billion in revenue, growing probably threefold over the next 10 years. And that's on a conservative basis. But the opportunity, I think, for the UK is much bigger than that. Fintech is as close to the broader tech sector as it is to the financial services sector. And in many ways, I think I could easily have talked about this as tech fin as much as fintech. But when I think about the sector in terms of fintech, tech sector and financial services, I think the UK can combine all three to develop a platform which frankly few competitors can match globally. There's a huge opportunity for the UK to lead on digital finance, on data strategy, on ESG, on digital ID, on central bank digital currency. These are the emerging themes for tomorrow. And really the question is, what position do we want to take as a nation to ensure that we set our footprint and our hallmark for the future? There are 1.1 million people employed in financial services. And the influence of fintech, exactly as you say, is an opportunity to grow, to upskill and future-proof employment in this important sector for us. We are also second only to the US in investment into fintech, and controlling for market size, we're probably their equal. So UK Financial Services themselves invested £95 billion last year in technology. The theme of the report is very much focused on scaling up, because I don't think we have a challenge or a problem in terms of startups in the UK. It's much more so in terms of scaling up. And fintech is no longer about startups in London. This government, I think, can play a significant part as the one that supports scale-ups. Scale-ups means widespread adoption. The UK adoption rate is already at 70%, significantly higher than the US at 46%. And the review provides recommendations to support scale in terms of investment, in terms of skills, as well as new approaches like Scalebox and a new entity, which I'll talk about later, the Centre for Finance, Innovation and Technology. So the agenda is not dependent on regulatory alignment or equivalence with the EU. It actually allows us to pursue policies on data, digital ID, CBDC, unencumbered. And the finance and technology sector should therefore form, I think, a significant part of the economic and industrial policy in the UK. So in terms of opportunities, I think there are three core opportunities where I think it can help us in the UK and help deliver for government. The first one is levelling up. Through the report, we've identified 10 geographic clusters in the UK, and scaling these regional clusters to create high-paying jobs outside London is a huge opportunity. Clusters typically employ more people, an average of 25% more than comparable businesses outside of clusters. They also pay more, with on average 11% higher salaries. A key example as it relates to the fintech sector is the Leeds Manchester sort of corridor, which is home to 13% of high growth clusters and businesses in terms of fintechs. Scotland is also playing a significant part in terms of that. And recommendations that I've made around skills are around building a pipeline of fintech talent by supporting fintech scale-ups to offer embedded work placements to further education and higher education students. Another recommendation is around a growth fund. There's currently a £2 billion funding gap for later stage fintech, and there's £6 trillion in the UK private pension schemes alone. So changes in regulation, capital charge and price caps could unlock the small percentage needed to support a £1 billion fintech growth fund. Additionally, supporting these 10 clusters that I referenced earlier is a key opportunity for us, because each cluster should produce and can produce a 3-year strategy to support growth, to support jobs, to foster specialist capabilities and enhance the national agenda. The final point I just want to make is around global Britain. A combined finance and technology industry is a powerful asset for the UK on a global stage, creating export opportunities, inward investment and global unicorns. Global unicorns such as TransferWise, or Wise as they're now called, OakNorth or Checkout.com. Some of the recommendations that I've made as part of that is to talk about fintech being part of the global trade policy. I've talked about listings reforms, which many of you will have seen in terms of free float production, preemption rights and a dual class share structure. And thirdly, international action plan to identify sectors and markets with the highest potential to scale and build leading positions for UK fintech companies. So, well, I think let me pause there, because in simple terms, this is not about a set of recommendations, but it's actually a strategy for a sector which is going to be even more relevant tomorrow, and how we make sure that we are fit for purpose for it. But as with every strategy, there has to be an implementation plan. And that's where we put a delivery vehicle in to ensure that we can make that work as well. So I'll pause there, Will, and obviously we'll explore more of these as we go through. Thank you.
Ron, thank you so much. That's a fantastic summary of your incredibly kind of deep and detailed report, and I think does go quite far to setting out some practical recommendations, which I suspect we'll get into in the Q&A afterwards. Now I'm delighted to turn to Charlotte Cross-Ron. Now, Charlotte, you've been intimately involved in this report and represent the sector as a whole. I'd love to hear from you on what you think the opportunity is and what you are looking for from government, but also what the industry can do itself. Charlotte.
Thanks, Will, and thanks to Onward for hosting this. For me, when we were talking to Treasury back in 2019, in fact, and looking at where the fintech sector had got to, and one of the reasons I was so supportive of a review was I felt that since the financial crisis 2008, we'd made just incredible inroads into innovation in financial services. We'd seen so many fintech companies starting, making consumers and businesses' lives easier, and a different interface with financial services. And a lot of those have been grown into unicorns and are now exporting those solutions around the world. We also have seen government being very supportive of this sector, talking about the sector a lot. We take that for granted in the UK, and we constantly push our ministers to do more. But actually, that's not the case in overseas markets. And that's backed up by regulators who obviously were the first to bring in a regulatory sandbox, but also have a competition agenda to drive through transparency, choice, and competition into FS. So why did we need a review? Is without that, we had the risk that we were going to grow that sector organically, and we would have continued to do that, and we will continue to do that. Or we could take that slight pause, look at everything that's been achieved across fintech, and then say, well, what can we do to take this sector, not just in fintech versus financial services, but actually fintech as a solution for financial services. And this isn't just about the fintechs themselves. This is obviously about large financial incumbents, whether that's banks, asset managers, insurers, all looking to drive through innovation in their own businesses, either because of demand from consumers or businesses, or because they're actually trying to take out cost across their systems. And as most people will know, there can be up to 200 system changes for any piece of technology change within a bank. It's incredibly hard to bring innovation in. Some of them have tried and not succeeded in building their own fintechs, but all of them are very engaged on the innovation journey. One bank alone was telling me that about 90,000 people per year go through their incubators across the country, 90,000, and learn from that experience of dealing with banks. So we have to be careful that we don't just talk about fintech as in the startups, but actually what the movement is. And I think for me, on the back of the review, it's absolutely essential that we look at this to what the sector needs. And we talked about talent, we talk about capital, we talk about regulation. For me, that's a given. It's now what can the sector do to drive forward our innovation. And I think that's what's really crucial. And that will what will stand us apart from other markets around the world. You'll be aware that in France, they're constantly phoning up UK FinTechs, come here and move over here, and we'll help you through the French banking system. Singapore, we see all the time as well. It's a competitive market, but actually what we really need to do is collaborate, is help our companies export. They will grow and scale in the country that is the most supportive of them, where they can find that talent and capital, where there's the relevant regulatory regime, where people want to help them on that journey, and where there's a financial services sector that obviously is ripe for innovation. And that's where the UK is so well positioned in taking this forward. But we shouldn't rest on our laurels. We have, Brexit has made it a little bit more challenging. Let's face it, a lot of the fintechs have had to go and get a secondary license to be able to continue their business across Europe. So that's put in a hurdle. It's made talent a little bit more challenging as well, although COVID has helped us through some of that and finding different ways of attracting talent, even if it's virtual. But I believe that if we're going to truly drive innovation in financial services and keep our FS sector so strong in the UK, that the evolution of that sector, the innovation around it, is going to be the piece that's going to drive us forward. So some of the recommendations talk obviously about supporting the fintechs, but the delivery model that Ron referenced is also about getting now those financial institutions there, working together, setting it the challenges, and then saying the global banking system, what needs to be changed. And I think that's where the UK has just an incredible opportunity now to drive forward that innovation. And in a very exciting future for the whole of the FS sector, powered either by the banks or the fintechs creating their their own unicorns, and then looking at our export opportunities, where just an incredible opportunity now to take it forward.
Thank you very much, Charlotte. So both of you gave incredibly optimistic remarks about the kind of opportunities here, but also I think rightly focused on some of the practical challenges and steps that we need to undertake to move forward. And both of you pay tribute to the work that's already been done, which I think is important to recognise in this space. We do not come from a standing start, as you said, Ron. We are in the process of scaling up and kind of leveraging the opportunities that we have before us. So I was going to start, if I can, by abusing the chair's position and kind of asking about we've talked a lot about the opportunity, but I'd like to just touch on the challenge, because both your review, Ron, and actually more particularly Jonathan Hill's review of the listings regime, Jonathan talked quite a lot about the challenge that the city is facing from Amsterdam and New York, and financial innovation, especially in the listing system, around SPACs and dual class shares and etc., detracting from the city's preeminence within financial markets, and alongside Brexit starting to undermine some of the case for being in the UK for some of these firms. And I just wondered the extent to which you see that challenge as a similar burning platform. I mean, we've talked a lot about the opportunity. Is there a burning platform that we need to act, or we will lose, or is it simply that we will not grow as quickly as we might be able to do? And so I'm interested in both of your views on that question. And perhaps Ron, you might want to come in first, and then I come to Charlotte, who's addressed this a little bit already.
Yeah, thanks, Will. Look, burning platform is always a dangerous term, because it sounds as if something immediate has to happen. But I think we have to think about the future. We have to think about where we are starting from. Something like 3,300 listings took place on the world's major exchanges over the last 5 years. Of those, just under 40% were in the States, New York and NASDAQ. And of those, only 4%, just over 4%, was here in London. So the question I think that I ask myself is that representative of what we want to be in terms of a global Britain? The answer's got to be no. So that's the starting point from me. So that's why I've been very much in the space of encouraging government to look at the free float requirement on companies here in the UK. I've encouraged them also to look at share classes. These are important ingredients. They're not the only things that need to get done, but we have to be competitive. And the thing that's staggering is that we are an outlier in many of these areas at the moment. Other markets, other financial markets, have got these rules and they can cope. So the naysayers who've basically been saying, well, actually, this is a dangerous thing in terms of what it means for shareholders, investors, I don't believe that, because actually, if it's being done elsewhere and we know what's happening and how it works, then it can be done here. So I think it's an important facet that we've got to take care of, because, what is it that founders are interested in? They're interested in growing their business. They typically have dreams about the way they think about their business. They've got visions about it. So scaling capital is an important segment of where you're, with that question. It's pretty well recognized here in the UK that there is a growth capital funding gap. It's particularly so in Europe, but it's especially so here in the UK. It was part of the reason the BPC was set up, the British Patient Capital Review. Charlotte was involved in helping to work that through. It was part of the reason that that was looked at. But it was a good initiative using government money. What I'm trying to think about is, how do I get private money so that the government isn't being asked for anything else to help fill that gap? So to take the lessons from the creation of the Business Growth Fund, which was pretty challenging in its own way, 10 years ago, at the time of a very different crisis. But to take the lessons from that, because they can't invest in fintechs, because they're basically owned by banks. So how do we, with industry, stand up a growth fund, which has industry participants as shareholders? So it's insurers and pension funds primarily, but with the government helping by creating some influence to make it happen. And also to look at the regulatory obstacles that prevent our domestic insurers today and pension funds from investing in growth companies. obstacles are already being looked at, DC pensions, etc. But that was also part and parcel of the way Jonathan thought about it in his work. So it's challenging, but we've got to find a way to create some and put some oxygen back in to the UK economy, because when the head office is here in London or in the UK, jobs will migrate. It's inevitable. I was involved in a business called WorldPay, as you referenced earlier. It was a fantastic fintech. It was growing rapidly. We listed in London, and because of the need for scale, it was bought by a US entity. Whilst the jobs haven't reduced dramatically, many of the central functions have moved to the States as a consequence. So I think we just need to make sure that we are thoughtful about where we're trying to build our businesses, because it is about jobs, it is about inclusion, it is about leveling up, and that's where the opportunities lie for the future.
Thank you.
We'll give you a sense of where I'm coming from.
Yeah, no, indeed. Thank you. Charlotte, would you like to come back on this point about the kind of the immediacy of the threat, or is it mostly about just the growth of the opportunity?
Yeah, and I think if we take it back to dreaded 2016 and Brexit votes, at the time the sector was very spooked, very, very against Brexit. And why was that? It's because they saw Europe as part of their market that they could expand to, and they wanted to have that automatic access. And as we say to them now, obviously they have gone through licenses to continue with that access, and it is on the doorstep, and it's still a really relevant market. But it is, I think we often get criticised for glossing over it, and I think we have to say that the UK is not a big enough market for a scalable tech or fintech company. It's just not a big enough consumer market, not a big enough business market. So while the FS decisions are being made here, automatically companies are going to want to export and expand overseas. So we're getting over the European issue, and I think that's still obviously working through on that. People are finding their way around it. I think for now it will still be the next natural step for expanding. But we obviously are seeing that US market as a really attractive market to enter, just because of the size of it. So there's lots of companies in the US, and as we all know, they have a tendency to embrace failure. So you're not a true entrepreneur unless you fail twice along the way. But the US has a better system of just continuing to try, because when they are successful, obviously the returns to the investor are just incredible. And as a result, investors tend to spray out money across many companies, rather than here, where sometimes I feel they stock pick a little bit on the venture capital side. And until we start to see some really great companies exiting and providing that value to investors, I think we still have that slight danger of, is the UK able to do this or not? In the tech, I was very involved in tech listings back at the end of the 90s, and we saw all of those companies move to the US, to Ron, what happened with WorldPay. Fintech is not so obvious that will happen. Yes, the US markets, do offer attractive valuations, attractive comparables, and attractive tech sector. But why is that? Because they've done it in tech. They haven't really done it in fintech. There's a few out there. And in fact, those who show that they can expand into Asia are going to be just as attractive. So we do have to be careful that we don't want to lose our capital markets, these IPOs and listings, into the US. And that actually then relates back to your Series D, your Series E, and even your Series A funding, because actually some of the expansion opportunities will either be in Europe or will be in Asia as well. And so the UK is very well placed to do that. But it is always a risk that if you go and get early stage funding from a West Coast investor, that there's a good chance the follow-on funding will come from the West Coast, and inevitably we move companies there. And then that may not be the right thing for the fintechs, but it certainly will also probably make it more challenging to expand into Asia as well. Some of the free trade agreements, incredible opportunity there. We're already seeing digital trade coming up in FTAs, and some of the data sharing. Again, that's incredibly important for the sector. It needs to export. We need to prove we can export these products. And that's what will attract the investment into the UK. So it doesn't matter where the investment comes from, but I think we do want to ensure that the IP and the jobs where they can are still retaining here, so we continue to evolve our own FS system and show that actually you can grow and scale a big tech company or fintech company from here. But we can't be complacent on that. Listing rules and free float are incredibly important for founder-led businesses. They just will not list in some cases here unless that gets changed. So for me, that is a given. It's not being received by 100% of investment perhaps, but we have to evolve and innovate our capital markets, just like our our companies are evolving and innovating financial services, and this is just one step of it. So there is an urgency. It is a market that I think is watching very carefully to support. But yet, when we look at 2021 and the last 5 years, we're still seeing new companies starting here, new companies growing here, and actually pretty positive on everything the UK has done. So we can now drive that forward, I think.
And well, just if I may add something, which is that the UK is a great place to do business. I mean, as evidence, exactly as Charlotte says, look at some of the fantastic unicorns that have been built here and are being built here. And one of the strengths, I think, is investment in the UK. Something like just over $4 billion was invested in fintechs last year, 2020. When you compare that to the rest of Europe, that level of investment in the UK was more than the next 4 European countries combined. So you can start to get a sense that people feel positive about it because the opportunity is so significant. And we've got a tremendous regulatory framework. We've got a relatively small geographic landscape to try and work from. It's not the States. Things are compact, and people know what the rule of law is here. So I think many of these things actually make it very attractive to be here. What we've got to do is to carry on fueling that so that more businesses are here and grow. And we want to find the opportunities, and Charlotte quite often talks about this as opportunities to make sure that we're thinking about this as the next sector for the UK. So it's a global asset. The US has sort of stolen a march in terms of technology companies. We haven't done that here. We haven't got the same credibility yet, but this could be one sector. There are certain aspects of the way that we think about mergers, acquisitions, we're going to have to think about much more sensibly, because scale is critical in many of these businesses, and scale will come through consolidation and through M&A. So we've got to be alive to that, and we've got to welcome that as well.
Okay, thank you. That's very helpful and a good place for us to start the Q&A. I'm going to now come to, we've had a few questions come in, and I'm going to come to a question from Anthony Thompson. I will come to the other questions afterwards, but this question asks, so firstly, he's incredibly complimentary about the review. He says the review offers a really ambitious and credible plan for boosting the UK's fintech status, and is arguably a template for future reviews. So incredibly complimentary. But he does say, having said that, there seems to be less analysis on the potential weaknesses of the business models or the consumer agenda, where there may be scope for the sector itself to improve performance. And he asks specifically, did the review have a view on how to ensure fintech genuinely democratizes finance rather than simply consolidating existing inequalities across different consumer groups? And how can you ensure that you're managing some of those challenges around governance, risk management, and profitability? So, Ron, can I come to you first, perhaps, and then Charlotte?
I'm going to suggest Charlotte, because she has this passion, I know, in terms of this particular issue. So maybe Charlotte, do you want to give your perspective, because I know you feel very strongly about this, particularly in terms of inclusion, etc.
Yeah, I mean, certainly in terms. Can you hear me? Okay. Lost you. Hold on. Bear with me. Are you there?
No, we can hear you.
Yeah, it's fine. Perfect. I lost you temporarily. So in terms of what's the role of fintech, it's there to help people. It's there to drive forward innovation. I always say it's not just there to make banks more efficient and make their margins higher. It has to serve a purpose. And what are some of the fintech solutions I get most excited by is financial inclusion and everything it's doing around that. And yes, that is unbanked, obviously, and that's an incredible challenge for the UK. There's still far too many people unbanked in this country, but it's more importantly the underbanked as well. So pre-crisis, approximately 12 million people had less than £100 in their bank account. So as you can imagine, that just takes one day of work, one child off sick from school, that people go into debt. They used to default to payday lenders. Perhaps now they can go to salary advancement schemes, but they're still right on the cusp of that. And the challenge that then leads them to is obviously that credit records get affected, and then when they try to maybe get a credit card, when they try to get a loan, when they try to get salary advancement, they don't qualify. So we have to get better at that. Now, every bank can't just solve that for themselves, and there's not many fintechs who can solve that either, because they've got to make the money from it to be able to hire the staff to do it. But we have to then look at that from a tech-led approach. We have to give every person in this country some form of ID, and I'm not going to go ID cards, but digital ID is part of this, the ability to look at the opportunities for them, whether that's a consumer set who's rich on the margin of debt, but also a small business as well. Small businesses still, in many cases, will go down to the high street, ask for a loan, will get turned away, and don't think there's any other alternatives there, instead of really understanding the opportunities there. So for me, when we talk about democratizing finance, that is actually about making it fair to everybody, wherever their stage is. And if they are into debt, is there a way that we can give them that record that shows them a path out of it? If it is a small business and for whatever reason they don't qualify for a loan, and we're going to see a lot of this coming up over the next 12 months as new businesses start or businesses want to refinance, how do we show them the options that are available for them, rather than just sitting there taking the highest percentage they can? Now, the fintech sector still, it's not going to have a magic wand about this either. We're going to have to find that solution together. But I would like to see the future of FS really looking at consumers and businesses first, and looking what's needed as much as what were the suppliers as well, and making it a fairer system up and down the country. And we've seen obviously bank closures. A lot of people are very passionate about it. Is that something that we should be able to survive? Yes, we should be able to, but that requires proper infrastructure. It allows people to have access to the internet. We talk about Wi-Fi problems up and down the country, and everyone's known that during COVID. So how do we sit there and say, let's solve that in big society problems, and make sure that it's a fairer system? It's not saying that everyone has access to ultra low loans that they don't repay, but it's really showing that the opportunities there are for them, and the fact that it's not always the four banks who are going to give them the ultimate answer to every single question. I just wanted to come back quickly on the scaling, and I think some of that was on the regulatory side as well. I am not advocating that we have the lowest amount of regulation in this sector. For me, it's absolutely imperative that we hold to high standards of regulation, because otherwise, how do those consumers and businesses trust the sector as well? And I think that's something we are still working through. It's incredibly important that we don't want to over-regulate, but if it's consumers and small businesses, we have to ensure that those businesses that are serving them are holding themselves to account. And there's some amazing fintechs, and most of them, nearly all of them, are holding those high standards. The FCA is obviously adding in a lot of regulation at the moment as a result of that. But actually, the really big fintechs, most of them aren't complaining about that. They actually want to show that they are upholding those high standards, and are therefore, we can build that trust into the sector. And I think the trust in the sector is going to be what makes it successful.
Indeed. I mean, most of the challenger brands are effectively building whole kind of reputations built on trust, aren't they? I mean, it's they're kind of huge part of this. Ron, did you want to come back on this question about democratizing finance?
Yeah, very briefly. As Charlotte says, I think fintech provides a unique opportunity to not just to improve on, but to build upon where the larger financial institutions have been, to improve the lives of consumers, of savers, of citizens, of small businesses. There are so many examples, Charlotte's touched on them, but if you think about SME finance, which I think is going to be a critical ingredient for success for the UK, simply because of where we're coming from in terms of COVID, just take one example. There was one particular fintech, Funding Circle, which became accredited post-lockdown, and it distributed 25% of the CBILS loans. They and others stand by to pick up the demand, I think, from small businesses post a lockdown who require refinancing. And the opportunity, I think, is for banks and fintechs to partner and, frankly, to create a wider distribution network, leveraging online lenders. Salary advance schemes are other ones which are going to be critical. Credit scores are going to be important, I think, going forward, because a credit reference agency helping lenders to make better and faster credit solutions is going to be critical. Digital banking for the unbanked. I mean, the list just goes on. So I think the thing I get frustrated about sometimes is that people think about this as a niche activity, whereas actually it's mainstream. We just have to open our eyes and see that it's mainstream in terms of where it is, whether it's global payments, whether it's connected payment services, whether it's open banking, whether it's RegTech. So this is not something that's going to go away. This is something that we just need to carry on helping in order to grow.
Thank you. I'm going to now just take a question that's just come in, just because it relates a little bit to what Charlotte was saying about the unbanked and the underbanked, which is specifically asking how fintechs are reaching those target audiences. How are they ensuring that they do kind of target the unbanked or the underbanked. Do you think that the industry is doing enough on that point at the moment, and what more should they be doing, potentially with government help? Is there anything that politicians should be thinking? And perhaps, Charlotte, you're probably best placed to come on this first, I suspect.
Yeah, and it's a great question, because there's still a lot more work to be done. And I often talk about London fintech solutions, solving London fintech problems. So we do need to remember that up and down the country, there's different needs, different wants, and different access to finance as well. And that might be the university student who's sitting there and trying to pay for things remotely, but it might be the elderly who are still want to use cash. So I think we've got to look at that whole spectrum of it to make it fair. And this isn't about the rush to sit there and just get a Challenger Bank app and drive yourselves forward. It's a more complicated system than that. So I think working locally into those ecosystems is incredibly important, highlighting some of these solutions. There's still work to be done. There's lots of work to be done with the LEPs. We deal with the LEPs across the country as much as we possibly can, and using them to educate. We've spent a lot of time with MPs. And you're seeing more and more backbench MPs understanding now that this isn't this buzzword fintech. Actually, it's helping real life constituents. One of my favourite moments which is quite sad really, during lockdown, was one of the business councils from quite a remote area phoning me up and saying, well, actually, what are you doing to get these CBILS accreditations come through? Because our constituents, they want to sit there, they can't use the banks for whatever reason. They want to use X fintech lender. So we must remember that actually there's people up and down the country who are using this, but it still needs more. One of the interesting challenges Treasury did a couple of years ago was a rent recognition challenge, which was actually saying, as we look at a generation of renters, how do we provide them with a credit record that they have paid their rent on time for years and years and years, and therefore that could be built maybe into the affordability index when they finally do get a mortgage, or they can transition from one landlord to the next and not have to go through this painful process where they're using a private landlord. And some of the challenges, and the responses to that, and proof of concepts, were just incredible. Some fintechs were there in that space already and brought forward those solutions. Some others just spun up the solution over the weekend and said, look, this is how we think we can move that forward. And if we start to use that from government to set those challenges, we've seen DWP, HMRC doing the same, and saying, come to the sector and look at what the art of the possible is. Yes, we may need some of the banks to implement, we may need some of the fintechs in. That's when we know we're really using the best of the technology brains around the country. And I think there is increasing understanding from government, from regulators, from think tanks, and from then consumers and businesses as a result in what the alternatives are to financing, in whichever guise that is.
Thank you. Ron, I'm not going to come to you on that question because I think Charlotte's quite comprehensively answered it. And I was going to ask you the first question that we received. So thank you to Simon Hayton for being patient while I asked other questions before his. But so he's asked specifically, how will the fast track visa you proposed work? What will that look like? And subject to the government's response to the review, when might we expect it to be up and running?
I don't know the answer to the second one as yet, but the reality is, as with reviews, you tend to produce the work, then hand it in to the headmaster. The headmaster has to mark it, and hopefully, he gives it a good score. All the indications are that it will be a good score, but obviously it's up to the Chancellor to respond, and he's been rather busy in the last few weeks, so it's completely understandable where things are. The tech visa is an important one, and in fairness, it seems to be embraced because the Chancellor has spoken about it, as other ministers have as well. The way that, what we were trying to solve for, just to be clear for everybody, was that on the back of Brexit, it now requires another hurdle to be put in for an organisation. So if I'm going to offer Will you a role to be a developer from one of the European states to come in and do something here in the UK, then in November, pre-Brexit, it was relatively straightforward. You could just come straight through. But now you've got to go through a process, there's got to go through a visa application, you've got to go through the immigration system. So that's likely to take somewhere in the region of about 8 to 9 weeks. So we can offer you the job, but actually you're going to have to wait for 8 to 9 weeks before you've got clearance. So we've identified certain criteria, and we're working, in fairness, with Home Office now to just refine it. So there's more work that's being done as we speak. But in simple terms, if the organisation is a fast track company, in other words, growing rapidly, and we put some criteria in, then it should qualify for enabling, in this situation, Will to be employed in the same way as he would have been employed pre-Brexit. That's the simplicity of it. I think we'll get there because everybody recognises that there is a skills shortage gap today in the UK. And if we don't find a way to fix this, we're going to end up with a different problem along the lines of jobs, etc., that we talked about earlier. So that, I think, is the way that this will get addressed. And I'm pretty hopeful, as I said earlier, that this will get looked at favourably because everyone's trying to find the right criteria, the right sort of proposal in terms of how and the process to get it through. So watch this space is really the simplest answer I can give at this stage.
Thank you. Charlotte, did you want to come in too on this question?
I mean, I think just in response to Simon, it's normally the first question that we get on every single speech we do, which just shows you the demand that there is for this. You know, and it's something that obviously we had raised as an industry body multiple times as well. Is we don't want to turn away jobs, and these are well-paid jobs that I think are good for the economy as well. But we also, a lot of these fintechs, they don't really mind where they hire the jobs. They can cope. Most of the companies that are that growth, have global businesses. So for me, it always seems a crying shame that we put 40 to 50 hires per month into a different country because it's too difficult or bureaucratic to get them in here. That doesn't seem right. And I think we raised that multiple times, pre-review, during the review, and I think that has landed very well. In Canada, they take 1 to 2 weeks to get through a fast track visa. So I think we use that as an example, and I think there's definitely ways to move this forward. But ultimately, otherwise, the jobs will just go elsewhere, which isn't obviously what anyone wants.
Thank you. So I have the kind of experience of being someone who used to work in the Home Office because I worked for Theresa May when she was Home Secretary, and I remember vividly long debates that we had around tech visas, not fintech visas, but kind of tech visas more generally, and the tech city visa scheme that was introduced back in their day. And the challenge was always, how do you justify it for one industry when you don't justify it for others? What makes fintechs special compared to whatever else industry might be calling for? And as in the Home Office, we were subject to lobbying every day from different interests within the economy to liberalise the immigration regime in order to help them attract talent. Can I ask, what's your best answer to that question? Either Ron or Charlotte, but I'm interested in why you think this deserves special treatment as well.
Well, I think this is going to be looked at, I hope, on a broader basis than fintech. It goes to my earlier point. This is not so much about fintech. This is more about tech, fin by definition. So I think this is going to be addressing exactly the points you were looking at by the sounds of it, Will, in terms of a tech-enabled entity getting this, because it is about common factors: fast growth, continuing growth, employability, and actually, potentially leveling up as well. Because I think there's going to be a set of criteria that we'll be looking at to try and make sure that we're addressing this in the right way. So I'm not one to say, Me Too, it only should happen for fintech. This review is principally about fast, high growth businesses that are the future of the economy in the UK.
Understood. Okay. Charlotte, unless you want to come in on that, I'll just carry on. So so the question that we've just had from Mike Riddell has asked, this is perhaps a slightly kind of left field question, but I think it's quite an interesting one, which is asking the extent to which, so he says, Andy Haldane has called for a digital civic currency that rewards volunteers with credits that they can redeem at participating businesses in order to provide greater incentives for civic participation, something Andy, as you will know, Ron, is incredibly passionate about personally. And he's asking whether or not there is a case for, in this case, a particular cluster in a part of the country in Stokes and North Staffs to develop this as a payment system. Do you see promise in an idea like that, or is it just, as he says, head in the clouds?
No, look, I think the levelling up agenda, which is huge in the country and in the government as well, appetite. It's interesting. About a third of all fintechs are outside London. So, to reinforce the earlier point, this is not about a London-centric activity. And we've looked at the country and basically divided it up into 25 clusters. and then define the next the 10 within that, which are the fastest growing ones. And we've done some work, courtesy of Deloitte actually, which maps out the UK in terms of where are we now, the landscape, and where could we be in X years' time with some energy put into it. But clusters are typically characterized by 2 or 3 factors. The first one is that there's an existing financial services or technology domain expertise that's there. The second is that there are 3 or more higher education establishments in that cluster area, and typically several fintech accelerators as well. So I don't think it's a thought which is a bad one at all. I mean, whether it's the one that you particularly talked about in terms of this opportunity, but it does feel like we're going to have to look at every opportunity such as this and look at where are the centers of opportunity as well as the centers of excellence that can be created. And that's the way that this work will be done. And I think that leads nicely to the agenda around CFIT, which is the Center for Finance, Innovation and Technology. That's such an important ingredient for the future of an industry such as us, such as FinTech. So happily talk about that a bit more if that would be useful, because I think that's when the strategy starts to come together to start to develop a capability to deliver solutions and provide real collaboration between government, industry and regulators. You know, one staggering fact was that there were 28 industry bodies who are very well intentioned across the fintech sector. And they're all trying to do many, many things. But what we've now got to do is, I think the sector's grown up to the point where we need to bring certain things together. So establishing a new entity, an organization a little bit like the Green Finance Institute, to build a broad coalition upstream of product development in private firms to grow the market is the way to think about it. And the intention is to harness the best of financial services and fintech collaboration and provide a much more a focal point for government, for banks, for academia, for regulators to leverage the fintechs for the best recovery opportunity from COVID for consumers and for SMEs. We've identified some early indicative coalitions that we should look at: financial inclusion, SME lending, open finance, digital ID potentially. But the objective is to have a couple of outcomes. Firstly, to increase the financial capability of both individuals and SMEs, to increase productivity and to grow, and to have a much more inclusive sector, but also to find a way to scale the companies and the solutions to help us retain and global market share. So that's the way that we're thinking about how we should drive this forward. But you know, to the earlier point, we need to get a mandate from government. Yes, go ahead and do it. They've done it for the Green Finance Institute, so we've modelled it a little bit on that basis, because it just feels like a massive opportunity to take this to the next level.
So thank you, Ron, because I think this is a really good idea, not least because I think a lot of our policy problems come from a lack of institutional capacity or capability. It's actually about kind of the kind of weight of an institution creating centrifugal force around an idea and bringing in business and government and civic society to drive it forward independent of government, rather than constantly having to rely on ministers to pick up an issue and drive it from government, which historically hasn't always been that successful a model. So I like the idea. I guess the kind of question that I have is, how much do you really need the mandate from government? Can you not just do this yourselves? And I might just pose that question to Charlotte, if that's okay, given the fact that she represents the sector.
I mean, I think the sector can obviously do a lot. You know, coordinating it, pushing it forward is always a challenge, because each fintech has obviously got their own business and they're trying to drive that forward. So when you go to them and say, "Could you solve for this? It's a societal issue," they'll say, "Well, actually, I've got my own business over here. What, you know, who's going to use it? How am I going to drive that forward?" So obviously, we already see the partnership between the banks and the fintechs. Banks go to fintechs, "Can you help me solve this? I'm trying to fix a problem." But that won't necessarily be every problem, and it certainly won't be done across the country. So I think that's the challenge. So for me, CFIT is about how do we further innovation in financial services, not necessarily how do we support fintech. And I think that's where the challenge is. So yes, the fintechs will crowd in with some of those solutions, just like we did on some of the fintech challenges we've seen in the past. But it's important also that if there are problems being faced by the banks, or the banks are being asked to solve those, we bring them in there as well. So this isn't a centre. We don't need another body for fintechs, because we've got lots of bodies for fintechs up and down the country, and the ecosystems are amazing. We all collectively do as much work as we can to connect them in. But it is about saying, when we're solving these problems, how do we do that? Who's the recipient of that? Who wants it? Who needs it? And then how do we drive it forward? And I think mandates from government are incredibly helpful to bring that focus point there. So back to the point on the recognition challenge, would the fintechs that came forward with their solutions have driven that forward if they didn't think there was going to be an end customer? Probably not, because it's quite hard. I think to one of the points, how do you get that solution out across the country? But they're not the only thing. The mandate is needed, but that's all it's needed. Industry can actually go and find the rest itself. And as you will know from time in government, industry is needed to drive these things forward. But I think it's not all cases, but in some cases, if it's big problems that are facing the country, or we're looking for big solutions, having that posed and then taken forward by industry is the most important. And we're seeing this in digital ID. Obviously, at the moment, industry can go and solve it collectively, but they've got to realise this: what are they solving for, and who's actually wanting it solved?
Thank you. Well, that's a wonderful segue, Charlotte, to the issue that I was very keen to address just before we finish, because I think it's one of the knottiest policy problems in all of this, but potentially the area with some of the greatest opportunity, which is kind of the digital ID and the creation of a kind of standardized system for identity verification. It could have huge implications for fraud prevention, as you know. It could also make government services significantly more efficient and responsive. I just wondered, kind of, how would you envisage a digital ID system being introduced? I mean, as you say, it relies quite heavily on government setting some of its kind of terms of reference and kind of guidelines, potentially setting up a market to deliver it, or doing it itself. This issue has kind of continually hit pitfalls, going right back to identity cards, but also with Verify and other government schemes. Kind of, actually, how do we make this happen? And is the pandemic, I guess, is the kind of live question, is the pandemic a moment where it could happen, because people want pandemic passports, or they want identity schemes which prove their ability to make use of freedoms, and that they're vaccinated in that way. I don't know, Charlotte, you have your microphone turned off mute, so maybe I'll come to you first, and then Ron, I'll come to you to respond, but also to give some concluding remarks, perhaps.
I mean, it's do we need digital? Are we going to have digital ID in the next 20 years? Yes, we are. Probably in 10 years, and I hope a lot quicker than that, because I think, but it's what it means to different people. Does that mean you can just switch across, and banks are going to take their one verification and then move it to another? And what's the trust framework that people are being asked to look at? Or is it something that a consumer and small business can opt into, bit like open banking, and then say, I actually want to sign up to that? And that at a minimum is what we should be doing. I quite like the fact it could start with small businesses, because I think SMEs really need that help. And probably if they understood what open banking, open finance, open data could do for them, I think they would use it. When we go near ID cards, it's when you're going to be looking at the 20 years time, not probably the 5 years time, because it becomes incredibly political. You're quite right. I mean, how many people are clamoring for vaccine passports so they can get on a plane as quickly as they can? How many people have downloaded the Test and Trace app? Why we're not putting vaccine passports onto that when there's 15 million people have downloaded it? So I think these are, people are signing up to things if they think it can help them. But obviously, this is your financial advice. You have to be incredibly careful on how that's going to be, made safe, and make sure we don't have cybercrime, etc. But I think it will have to be positioned to an end consumer, and I think it's going to have to be optional to start with. To that. But actually, if you look at it from the SME perspective and economic recovery, I think there's definitely a role to play. So we actually are leading, just started a task force with UK Finance over there, looking at that framework. And we have fintechs and the banks around that table looking at that collectively now, which I think is the right solution, sort of looking at it from different angles of that. And then we'll continue to push this through. But ultimately, if this opens up choice and transparency and options for consumers and businesses across the country to have what I call a financial passport, which is less controversial and probably digital ID, then we probably are going to move our banking system forward, exponentially.
Thank you. Ron.
Very, very briefly, because I'm conscious of time, we've been very straightforward in the review to talk about the fact that the government should establish and develop a digital ID trust framework. Actually, there's a lot more work going on in the background at DCMS and others than I think is visible, and I think there's some good work going on with government. But there were certain attributes or principles that we've highlighted in the review, which I think are core to the successful verification infrastructure. The first one we suggested is that it should be a corporate ID that should be within the scope of the trust framework. And the reason for that is that a corporate digital ID could help verify companies applying under the COVID business loan schemes, for example. We have to think about the immediacy of the issues that we're facing. Additionally, the solution should make sure that it is digital based. Let's not do the normal thing, which is, well, it's a digital workaround that basically makes papers around the place. Let's not do that. It should be attributes based as well in terms of the infrastructure. And there should not be a centralized pool of data. So a federated model is another thing that we've put. So we've put several things in. I think, as Charlotte says, this is going to happen a lot faster. And I think COVID has been an accelerator in many ways in terms of the way people think about the behavioral change that we've now seen. You will have heard the statistic, I'm sure, that something like 6 million people in the very first month of lockdown, last year, downloaded a digital banking app for the very first time. So, and they haven't gone back and said, well, actually, I want to go back to branch banking. This is the way that the world has moved, and this has accelerated at such a pace. So whether it's digital ID, whether it's a data strategy, whether it's central bank digital currency, whether it's smart data, these are the technologies that we've got to shape for the future. And I think we've got to shape them from the UK because we have got trust in our system. We've got trust in our regulator. And that's, I think, the opportunity that we've got in front of us, not just in terms of fintech, but more so tech fin. And I keep reinforcing that point.
Thank you so much, Ron, and thank you so much, Charlotte. This has been a completely fascinating discussion. I've learned a huge amount, and it's just been wonderful to be able to discuss these issues in a bit more greater detail. This is an issue that Onward has, as I said at the beginning, we've got a kind of keen interest in. We published a report called Data to the People right at the beginning of the pandemic, which called for digital ID and greater use of regulatory sandboxes and similar ideas. And I think there's very strong parallels between the kind of general direction of travel that we were setting out and some of the detail that is in your review. So it's really fantastic for us to be able to have this conversation. And thank you both so much for sparing your time and also being so generous with your thoughts as well. It's been brilliant. Thank you also to everyone who tuned in at home. I am perennially pleased by the number of people who tune in and ask brilliant questions at these sessions. And part of our role as a think tank is to surface some of these policy debates and have the discussion to a wide audience. So it's great to be able to do that, even though we can't see you all in person. And finally, I should just ask people to please do keep in touch with the work that Onward is doing and indeed the progress of the Kalifa review. As Ron said, government reviews don't finish when the reviewer hands in the review to government. They actually often, the hard work starts then, and you need to ensure that the recommendations are taken up and ministers don't forget about it in the midst of everything else going on in politics. So I'd urge everyone to keep up the pressure on government to deliver on Ron's recommendations, to work with Charlotte and her team to ensure that happens, and also to keep in touch with Onward and our work, which will be driving in a very similar direction, and I'm sure touching base with Ron and Charlotte in due course as well to ensure that we can continue their fantastic work. So thank you, everyone. It's been brilliant to talk to you, and I look forward to seeing you soon. Thank you.
Thanks, Will.